Hi, I'm Eric Starkowitz, Director of Industry Relations at the MBA, and I am pleased to introduce today's guest presenter, Katie Matscherz, Associate at Buchanan, Ingersoll, and Rooney. Katie's practice concentrates on complex litigation in state and federal court, specifically class and collective actions. Katie has significant litigation experience in a variety of industries with a focus on business disputes in financial, energy, and construction sectors. Today, she'll be presenting on recent developments in wage and hour litigation. For additional information, Katie has also published a white paper on the topic, which is available on the MBA website, along with this flash webinar. Without further ado, I'll turn it over to Katie.
Thanks, Eric. Hi, I'm Katie Matscherz. I'm an employment litigator with Buchanan, Ingersoll, and Rooney. I spend the majority of my time on wage and hour issues, and I also have experience in construction litigation. Today, I'm here to talk about 5 developments in wage and hour law that might impact your business. Today, we're going to cover 5 topics: hours worked, bonuses, classifying supervisors, and 2 new DOL rules regarding joint employers and the independent contractor rule. This is a first but critical step determining hours worked to calculate pay and complying with federal and state wage and hour law. You have to make sure that first you are calculating hours correctly. Pay must be calculated based on the work week, even if you pay on some other schedule like monthly. In addition, when calculating hours worked, construction companies often need to address both break time and travel time. There are plenty of others, but we'll restrict ourselves to these for the present purposes. For break time, it is typically not proper to reduce hours by classifying de minimis break time as downtime and not including it in hours. For travel, it depends. There are exceptions, but generally, it is not proper to exclude time spent traveling between job sites during the workday from the work time calculation. However, it is probably okay to exclude a morning commute from home to the job site. So the action item here, as we start a new year, is to review pay practices and policies to confirm that you are in fact capturing all hours worked. The second topic is bonuses. At this time of year, we often get questions about the impact of bonuses. Here are the ground rules. You have to assess whether a bonus is discretionary or non-discretionary. A bonus is discretionary if it is paid without prior contract, promise, or announcement, and the decision as to the fact and amount of pay is in the employer's sole discretion. If a bonus is not discretionary, meaning it's not those things I just listed, then you might need to include the bonus in your overtime calculation for non-exempt employees. Third topic that we're going to cover regards supervisors or superintendents. Recently, we have seen cases where an employer believes that his employee qualifies for the executive employee exemption because his title is supervisor or superintendent, irrespective of job duties. That might be correct. However, in order to qualify for the executive employee exemption, an employee must also be compensated on a salary basis of not less than $684 per week. The employee's primary duty must be managing the enterprise or a department or subdivision of the enterprise. The employee must customarily and regularly direct the work of at least 2 or more full-time employees, and the employee must have the authority to hire or fire other employees, or their suggestions regarding such decisions must be given weight. So the action item here is to review your job descriptions to confirm that supervisors or superintendents do in fact qualify for the executive employee exemption. Okay, now the fourth and fifth topics both relate to new or proposed DOL rules. First up is the joint employer rule. Construction companies often use subcontractors to perform work on their behalf. There are a lot of benefits to that practice, but it could expose the company to FLSA liability based on a theory of joint employer liability. There's two theories of joint employer liability. First, there's horizontal, which means the employee has employment relationships with multiple and related or associated employers. For those relationships, employers are sufficiently associated for purposes of liability if there is an arrangement between them to share the employee's services, one employer is acting directly or indirectly in the interest of the other employer in relation to the employee, or they share control of the employee directly or indirectly by reason of the fact that one employer controls, is controlled by, or is under some common control with the other employer. For vertical joint employment, that happens when an employee has a relationship with one employer, but performs work on behalf of the other employer. For vertical joint employment, the DOL focused exclusively on control. Recently, 18 state attorney generals challenged this rule, and the result is a federal court struck down the vertical joint employment rule. So that means now the current standard is the amorphous economic reality of the parties' working relationships, which was the standard that predated this new joint employment rule. The horizontal joint employment rule still stands, but we should definitely stay tuned to see if there's any other changes to this rule. An action item to take away from this webinar is to review your contractual relationships with third parties, as well as your actual working relationships to assess the risk of joint employment relationship. Okay, fifth and finally is the employee versus the independent contractor. This is a determination that construction companies face frequently. Now, there's a new DOL rule which adopts an economic reality test that focuses on the first of these two factors listed here, control over the work and opportunity for profit and loss. The DOL considers these the core factors in the analysis to determine whether a person is an independent contractor or an employee. The three remaining factors, skill required, permanence of working relationship, and the work, whether it's an integrated part or a part of the integrated unit of production rather, are additional guideposts that courts will consider. Your action item here is to review your independent contractor relationships and consider the various laws to which you are subject. You should consider applying the most restrictive of those laws so that you're sure you're complying. In sum, 2020 was a unique year with many important court rulings, new DOL regulations, evolving state legislation, and, of course, the global COVID-19 pandemic. As the pandemic rages and a new administration transitions into the White House, 2021 appears to be dynamic too. Stay tuned for additional and maybe even contrasting regulatory changes, new legislation, and further guidance from the court on unsettled questions. If you have any questions about these topics or want to discuss something else, my contact information is here on the last slide. Feel free to reach out by phone or email. Thanks very much.
Thanks a lot, Katie. And be sure to check the MBA's website for the white paper. Its synopsis is what Katie just talked about on wage and hour. Thank you very much.
Thanks, Eric. Thanks, everybody.